Good evening, all. Welcome to the virtual IPO roadshow of Maiden Forgings Limited. Maiden Forgings Limited has been manufacturing wide range of bright steel bars and wires form on value-added specialized product. MFL has a complete in-house manufacturing facility, including testing, packaging, and handling. It has been become a domestic leader in the industry, offering reliable, customized solution and constant access to the new cutting-edge solution to its customer. To discuss more about the company, we have with us Mr. Nishant Garg, Managing Director of the company, uh, Mr. Vikas Agarwal, Financial Advisor, Maiden Forging Limited, Mr. Ramit Makkar, Financial Advisor, Maiden Forging Limited, Mr. Anand Srivastav, Executive Director, Share India Capital Services Private Limited, Merchant Banker to the issue. Welcome all. Nishantji, I would like to hand over the call to you to give the brief idea about the company and its journey. Nishantji, over to you, sir.
Thank you, Vastupal. Uh, Hello, I'm Nishant Garg, MD Maiden Forgings Limited. Uh, Giving the brief about the company, our journey started back in 1988. It has been almost 35 years of journey. Back then, my father, late Sri Sanjay Garg, a visionary man, started with the production of carbon steel bright bars and wires under a proprietary. In 2005, Maiden Forgings Private Limited was formed, and in 2011-12, a major turnaround came into business when I joined the business after completing my education and joined my father. And at this point of time, the total operations of proprietary were shifted to the private limited company. And at that point of time, in 2010 and 11, the total sales of the company was around 13 crores. Uh, After that, we kept on adding on products, plants, as well as other value additions that we gave to the company. And in 2013-14, we added with alloy steel bright bars and wire set products. In 2016, we added stainless steel bright bars, and also Unit 2 was established where we are producing these bright bars. And in 2018, stainless steel bright wires were added, and unit third was established. And now totally by 2022 we have our seventh product also ready to be manufactured within the company. This is collated pneumatic nails, and in December 2021 we started with the sales of this product by getting the jobs done from outside sources. These nails are made from our existing product of wires. Basically, it's a forward integration. And in 2022, we have a top line of 211 crores and seven product lines in total, and a total three units located nearby in Ghaziabad with a combined land area of approximately 12,500 square yards. And we are currently utilizing 70% of our total capacity of 50,000 metric tons. So this has been the journey so far in terms of what changes have come to the company, what growth we have achieved, which is just, if we talk about last 12 years, it has been a 15x kind of a growth. And the product lines that we are currently catering to. Now, coming to the industry part, like what all industries we cater to, we are approximately selling 50% of our produce to to the engineering sector, which includes manufacture of fasteners, shafting, wire rope, and so forth. And then 25% of the chunk of our sales come from the auto sector, which includes all to tier one, tier two, and tier three suppliers of major automakers such as Hero Motocorp, then Honda, Maruti, Volkswagen, Eicher, Volvo, etc. Then 15% of the stocks come from home durables, appliances, and hardware industry, such as manufacture of products such as the door handles, door knobs, lock industry, mixer grinders, pressure cookers, such home appliances, and home durables. So remaining 15% of the 10 to 15% of the chunk is miscellaneous industries such as oil and gas, machinery manufacturers, etc., so on and so forth. So these are the industries we are catering. Now coming to the four major USPs that I would say our company has. First and foremost, the widest range of product in the bright bar and wire industries. Our thinnest size begins, the smallest size begins from 0.19 millimeters of wire and ends up at 100 millimeter of bright bar, which is approximately 4 inches. And this is the widest range someone is offering under single roof, as well as like I said, stainless steel, alloy steel, and carbon steel, all three products in bright bars and wires under single roof. That is also one of the major USP, as our customer gets benefit of getting all the products used in similar kind of and same kind of applications together, and they get it under single roof, which is only possible at Made in India. So uh, for this, we were also awarded just last year by Central Cabinet Minister Dr. Sanjeev Balian. We were awarded for the most versatile company in light bar and wires industry. And second USP is our delivery model. We are delivering these particular products that we are manufacturing in the fastest way. For example, the carbon steel bright bars and wires, which our competitors generally take around 7 to 10 days time to produce the material. We are delivering them just within 48 to 72 hours kind of delivery. The third USP is the that we are producing these products specifically for very precise job. That is, we are taking certain orders, the orders which are difficult to produce in terms of mechanical properties of materials, and we are doing that for some of the most critical applications of oil and gas industry and other such industries. Now, talking about the client, these are three major USPs, and the fourth USP is the kind of services that we are providing that helps us, keep regular customers, for and build long-term relationships with them. So as I'm talking about the customers, there are around currently we are catering to almost 450 customers on a regular basis, which is a great increase from just 3 years back when we were almost doing 250 customers. Post COVID, we changed some strategies and started selling value added products more and focus on the precise jobs more. So this gave us an edge in connecting with the more number of customers pan India as well as abroad. So this is the current customer base, and these 450 out of these 450 customers, few of the most valuable clients or renowned names that we are catering to is TTK Prestige, wherein we are supplying our bright bars for the pressure cooker tops as well as some connecting rods also, which are being used in the handle of pressure cookers. Then other than that, in the PEB shed building segment, the construction industry, we are getting to the top three names in the industry, that is Everest Builders and Interac and Kirby. These are the top three in their specific market in India. And we are proud to say that we are catering to all three of them. And uh, definitely, in two of them, we are catering the majority of the supplies of bright burst of their requirements. So such is our customer base. Um, in terms of finance, I have already shared the top line. Current top line last year we closed at 211 crores, and we have been a very much financially disciplined company with no single red flag in entire 35 years of its operation. And we have very long-term ships with our suppliers, customers, bankers, transporters, and any other stakeholder that has worked with Maiden has always been, a long-term partner to the company, and they continue to do so. And that is definitely because of our policies and our services that everyone who has been the part of this family is a part of this family, and now we are coming up with this IPO, and we hope first time we are taking the investments from outside, and we hope we would be we hope we would be building this relationship by definitely delivering to our commitments as we have done in the past. So now for the financial data of the company, I would like to hand over to Mr. Vikas Agarwal, uh, our finance expert. So, Vastubal, if you can just connect with Vikas ji.
Vikasji, uh, if you can join.
Vastubal, he's just connecting shortly. Actually, there was some error with this system. Yeah.
No, no issue, no issue. Yeah, Vikasji.
So
Yeah,
now,
hi.
Vikas ji, sir, he
Hi,
will
everyone. In
take you
terms of
through the
financial
financial
performance,
numbers. Yeah.
yeah, I am on Ramit's listen because I joined there. I think you connected me as participant, so I'm now on Ramit's laptop actually. Can you see me now?
Yes, we can. Please go ahead. Vikasji, you can go ahead.
Hi.
We can see you, Vikasji.
No, I can't.
Actually, there is some issue with the voice that we
Hello.
Yes, Vikasji, we can
Yeah,
hear you.
I am. Okay, perfect. So thank you everyone for joining. And in terms of financial performance of the company has been consistently performing with average revenue of 200 crores for last 3 years, with FY22 revenue of 211 crore. Uh, this is despite COVID impact in FY21 and FY22 for 3 months each. So effectively, FY21 200 crore revenue plus 211 crore in FY22 was effectively 9 month production. Uh, in FY23, we have clocked 164 crore. Uh, uh, but in apple to apple comparison basis, FY22 and FY21, because to protect our revenue, we had to do some uh, small margin business, because a small margin can be larger volume, but in terms of profitability, it is not that profitable. So in terms of EBITDA, average EBITDA has been 13 crore for last 3 years. Last 2 years, again, if we take the impact of COVID and add back the fixed expenses, which was unproductive, average EBITDA would have been 17 crores or so, uh, which is almost similar to 17.62 crore EBITDA, which we have in 9 months this year. If we take PAT level, average PAT have been about 2 crores, but this 9 months we have about 8 crores. So, which is largely the difference due to COVID impact for last 2 years, in terms of 3 crores of fixed expenses each year, and in terms of 3 months of finance cost and depreciation, which was unutilized largely. In terms of balance sheet, the net worth is about 40 crores, book net worth. But if we add the impact of capital gain on the properties that the company owns, 3 properties, this net worth would be above 100 crores or so. And the company has about 66 crore of borrowing. Effective utilization every time is about 60-62 crores. Uh, but the good thing is that the cost of borrowing is quite low at average cost of about 8.6%. And the company has been able to utilize the financing well in terms of its assets. Uh, in So these are some of the graphical number and graphical representation of total income, EBITDA, and PAT margins. This is unadjusted number. So if we adjust again, it would be very similar type of margins. In terms of future growth, the company is constantly switching from low margin business to high margin specialty steel business, uh, which is also reflected in this 9 month period, during which the company sold larger volume of alloy and stainless steel products as a product mix, and also started exporting pneumatic nail through job work, which had helped increase its margin. Going forward, also we see this pattern because the company has already invested 8.5 crore in new plant and machinery for pneumatic nail plant, which would start contributing to revenue and profitability from FY 23-24 onward. Uh, in terms of IPO proceed, 23.8 crores. Uh, we are uh, as, we have estimated 9.5 crore in investment in plant and machinery, uh, part of which would be doubling the pneumatic nail plant capacity from 250 ton per month to 500 ton per month, which in terms of revenue potential is for about 35 crore for current plant, and about 70 crore on a combined basis once the capacity double. In terms of and then another plant is about 5 crore of investment in 5 to 6 crore investment in oil tempered wire plant. The revenue potential of which is close to 50 crores every year. Both pneumatic nail plant and oil tempered wire products uh, contribute to average of 25 to 30% margin versus 15 to 20% margin in alloy and stainless steel, and 8 to 11% margin in carbon steel business. So, as you can see, the company is constantly increasing its share of higher value product in the kitty. And another thing that the company is also doing is consolidating its two of its facilities into one larger facility with additional area of 30 to 40% uh, of the combined two facility. The result of this will be that because these facilities in the heart of city, uh, whereas the new proposed facility would be slightly away, about 10 kilometer away, but the company expect to generate a surplus cash of about 20 to 25 crores, which would be available either for expansion or reduction of the debt. So I think I have covered most of the financial numbers and happy to take any answers, questions.
Thank you. So we will start with the question and answer. So what I'll do is I'll read out questions from that have come in comment box, and one by one we will provide the answers to the participants. So prior to that, anyone wants to ask the question, they can type in the comment box, and at the end of the session, we will try to answer as many as answer we can questions. So first question is from Mr. Nilesh Karani. Who are our top 10 clients, and are any of the products of the company cater to the defense sector? If no, by any chance, in number by any chance, we are looking at a defense sector.
I would like to answer that one. Uh, Top 10 clients include, like I said, there is a portfolio of 450 clients. So, top 10 clients, I can say TTK Prestige is there, like I said, Everest is there, Premier Pin is there, then there is Kasuya GPP is there. So, there are multiple auto component manufacturers. So, I cannot exactly list 10 right now, but 5, 7 are like that. And in line with that, there are multiple. Uh, Interac is there. So there are certain very renowned names of their industry to whom we are catering. And as far as defense sector is concerned, we already had our certification once, and now the scheme has changed. Like whenever we have to give supplies, we can start with it, and we are definitely looking at the defense sector aggressively as that's the growing sector, and our products have utilization over there. But yeah, indirectly we are supplying to certain customers in Faridabad and Chennai who are ultimately catering to the defense sector. So basically, they are suppliers we are catering to, and we look forward to directly supply to defense sector within a year or maximum two.
Okay, thank you. Next question is from Mr. Rahul Jain. Which markets or industry does your company target, and why?
Again, I'll take up this question. Uh, like I earlier told, we are almost doing 40 to 50% in engineering, 25 to 30% in auto sector, then 15% in home durables, furnishings, and hardware industry. And we are also targeting, like I earlier said, defense sector. Then we are also targeting oil and gas sector more. We are already catering to them, but we are looking to increase our market shares over there. So these are very lucrative markets, firstly, and then secondly, we are focusing on specialized steel segment of our company. We have increased the sale in last 1 year for the specialized items, and these particular sectors do have this application of these specialized steels, and that's why we are targeting so as to increase the bottom line of the company by certain percent.
Okay, thank you. Next question is from Mr. Anurag Saha. So, what is your company's approach to managing commodity price risk, and how do you mitigate potential negative impacts?
Vikash, you would like to take it?
Hello. So essentially, we don't carry commodity prices per se because whenever we procure, we get an order, we per- place the order for purchases and at the same effective price. So the maximum commodity prices that we carry is on the inventory that we hold. That too partially, which is not tied to any specific order. which is a minuscule portion of our inventory in any case.
Also, I would like to add on, like, the risk on the inventory is also notional because uh, we try to keep for a certain level of sales, we try to maintain a certain level of inventories corresponding to that, which will not hamper our, delivery times to the customer. So we maintain a particular specific amount. And for example, today I am selling 100 metric tons of material. So back to back, I would be, purchasing 100 metric tons of material at the same day's rate. So that's how we, mitigate the potential negative impact. As well as this gives us, little bit lesser profit margins when the market is, on downfall side. But to mitigate the risk of negative impacts, we have to let forego a little bit of the positive impact. So that's how we manage the commodity prices. Thank
Okay, thank you. Next question is from Mr. Prem Singhania. How do you anticipate this investment impacting your company's financial performance in the short and long term? I
So investment that we made, like I mentioned, 8.5 crore plant and machine investment that we made this year would increase the sales of pneumatic nails from 23, 24 onward. Uh, Potential full capacity wise, uh, it uh, it is about 3,000 metric ton production per year, which equates to about 30 crores in sales. And actual performance in short term would be depending upon the capacity utilization. Uh, we can't give a specific number, but in long term, we can easily approach about 80 to 90% of this capacity. As far as the IPO proceed is concerned, we would be doubling this capacity, so another 30 crores potential sale plus oil tempered plant 100% capacity, we would be close to 50 crores additional sale potential. All these new investment generally should generate between 25 to 30% gross margin.
okay, thank you. Next question is again from Mr. Rahul Jain. Can you provide an overview of the current supply and demand dynamic for the metal that your company produces and how they may impact your business? So I think they want to understand like the metal that we used in a product, how the current supply and demand scenario for that is.
See, that is one very much, very favorable point for our company because, we are producing all three types of steel, carbon alloy, and stainless. So what happens is all three markets somewhere behave in somewhat different manner. So, for example, if I talk about 3 years back, the alloy steel industry was down because of, low demand from auto sector side. So we started selling more of carbon and stainless steel. Right now, at current scenario, the good part is from last 2 months, what I have been observing, all three types of steel are selling at a higher, quantities. Almost we have, in terms of quantity, because the steel prices are a bit lower what they were, 6 months back. From there, they are a bit lower. So still, in terms of volume growth, we have almost increased our production in last 3 to 4 months time, approximately by 50 on month basis. We have increased it by 10% every month for last 3 months. So that is how the demand and supply dynamics currently is. And with this, inflow, we are also, getting into newer horizons by adding the forward integrations and the horizontal integrations. So that ways, we see it is going to be very lucrative in 23, 24, and also as per my estimate in 24, 25, because we are expanding the industries to which we are catering. as well as the number of products that we are producing. So the dynamics overall for our specific to our business should be very
Okay, thank you.
right.
Uh, Another question from Prem. So, Prem, are there any recent regulatory changes or trade policy that may impact your company's business, and how you are adapting to these changes?
Currently, in terms of regulatory changes or trade policies, there have been no, any major change that has impacted our business. So it's smooth. And we have a very, competent team with lots of some of the people who have 25 to 30 plus years plus of experience, very experienced from companies like they are ex Tata, ex Escort, and that kind of team force we have in our operations team as well as in the marketing team. So we are ready, willing to take any regulatory changes or policies. We are ready to adapt to them. So that's how.
I'll just like to add here one of the policy change that could favorably impact the company is anti-dumping duty on pneumatic nail plant in US on Chinese production, which which has which is around 200% as against I think 30% for Indian product. So our product currently is very favorably priced in US, and that is where we see most of our demand for pneumatic plant, nail plant. That in fact we have much more demand than even two plants that we are currently putting in in pipeline.
Okay, okay, thank you. Next question is from Mr. Bimal Gandhi. Are you planning to expand your exports this year, or you are focusing only on Indian markets?
We are currently export. Hello. We are, our primary focus, like I earlier said, defense sector is also our focus. But our primary focus and maybe we go triple of what we are currently exporting. So that's the primary focus after post IPO to increase the export base of the company, and we are very aggressively behind it. Thank you.
Okay, thank you. Next question is from Mr. Vijay Raka. Are there any recent or upcoming innovations or new product development in your company, and how do they address evolving customer needs and market demands?
Yes, like Vikashji also told, and I also told that currently we have started with production of collated pneumatic nails, which is still a product that is being uh, produced by very limited players, and that has a huge export demand from India, but players are limited. So one of the new product development would be that, and also secondly, we have the plan ready for action for oil tempered wires, which is one of the objective of raising these funds. So oil tempered wire is such a product where government is giving production incentive in the recent years. If we are able to, if we install it within 23-24 financial year, so there would be PLIs for next 3-4 years, and that would be adding to our value. And as far as how to address evolving customer needs and market demands, see, we are constantly innovating with our product mix as well as we are trying to find those products which are still newer to India, such as collated nails and such as oil tempered wires. So both these products are a result of the market research that we did, and that is how we identified the evolving customer needs and the market demands. Those are changing, so there is demand for these products, and we are behind them already. So that is how we are focused on these two.
Okay, thank you. Uh, Another question from Mr. Anurag. Does your company hedge against the price volatility in the metal market, and what strategy do you employ in to minimize risk? I think we have answered this question. If you have anything like to add,
Yeah, yeah. No, it was same that we are buying and selling side by side and uh, at an equal level of quantities. So the same thing that I said in commodity pricing risks.
sure,
So,
sure.
yeah.
So we'll take the next question. It's from Mr. Jason D'Souza. How do you plan to utilize the fund raised through the IPO, and what specific projects or initiative will be supported by this funds?
Vikas ji, I think you can answer this one. Okay.
I think Vikas's network is a bit low. If you want, you can switch off the cameras. We will switch off the cameras. I think there is a network lag. So we will all switch off the cameras. So it will be a bit easier. Yeah, Vikas, please go ahead. Vikasji, are you there?
No, actually, he is not audible over here. Okay, let me take up this one.
Yeah.
We are doing fundraising of approximately 24 crores through the issue, out of which approximately 9.5 crores of funds would be used in capex, mainly plant and machinery, and the other 8 to 9 crores would be utilized in the working capital part of those projects, and the remaining is corporate general expenses. In the capex part, we would be doubling up the pneumatic nails plant machinery that we have already installed from our own funds, one single line last year, and now we would be installing the second line, which will cost around 3.5 crores approximately with installations, and around 5 to 5.5 crores we would be utilizing in installation of oil tempered plant, which we would be doing parallel to our consolidation of two plants like earlier Vikasji told you, and this would be giving an additional output of around 3 to 4 crores per month for the financial year 23-24, and the actual impact would be coming from 24-25 financial 2024-25 financial year. So that is the specific objective of the and the specific projects that are to be taken carried forward via these funds.
Okay. Thank you. Next question is from Mr. Anurag. His last question can you discuss any recent or upcoming investment in your company's production facility or equipment, and how they will I think we have covered this, and how they will improve the operation efficiency and output.
Actually, Actually, I will just give a little addition to it. Last this financial year itself, that means 22-23, we have installed we have made investment of around 8 crores, 8.5 crores from our own capital fund of the company. And through this, like I said, in the financial year 23-24, it will add around 2.5 crores from the existing plan that we have already installed during this financial year. That would be impacting our next financial year. And moreover, it would be adding on to the margin that as that is the plan for most value added products of ours. And the as far as the operational efficiency is concerned, that was about the output, and in efficiency, operational efficiency. We have a planning for year 23-24. Like I earlier told you that we would be consolidating two plants, uh, facility that we have in the heart of Ghaziabad city, and we would be buying a single land bigger than those two plants combined, 10 kilometers away, which will bring us additional inflow of capital of around 22 crores, as the existing lands are at very high market costs, and the land which we are buying near, it is at a cheaper price. So these funds would be utilized to, firstly, reduce the debts of the company by some portion of it would be used to, reduce the debts, as well as, it will increase the, it will reduce the administrative cost of the company, as well as increase the operational efficiency in terms like, certain products require transportation from one plant to another after, as the processes are interlinked. So with single plant upcoming, that those costs and efficiency, costs would be reduced and efficiencies would be increased. So that is about efficiencies and the operations. Thank
Very nicely answered. Next question is from Mr. Sorry, Miss Nityasha Sharma. Are you are your manufacturing facility designed and operate in an environmental friendly manner? And what measure do you take to ensure sustainability and reduce your carbon footprint?
I think it's Nikita Sharma Bastuwal. Okay, and see, we are, complying with all the mandatory rules and regulations that are required, and we try, as far as possible, we try, to keep the activities environmentally friendly. For example, we are using, gases instead of utilizing electricity directly wherever it is possible. So the CNG, I mean the PNG gas, which is the cleanest. So that kind of systems we have already adapted in recent times, and with each passing day, we try to be more and more environmental friendly and try to replace the, certain pollution making activities, you may say, and we have installed ETV plants for waste, for the water filtration, you can say. It's effluent treatment plant, so we have also that within our plant facility. So we are taking such steps and trying to make it better for the future. Yeah.
Thank you. Uh, Next question is from Nishtha B. In what ways is your company well positioned to take advantage of market opportunities in metal industry?
Like during my initial presentation, I said that the strategic focus for our company, specifically after post COVID, has been to produce the items, specialty steel items. Because obviously the metal industry is very big and there are huge number of producers even for the bright bar and wire industries, no doubt over there. But still, for example, if one of the grade, that is the general grade that any industry known would be, having knowledge of, that is 303, but it is produced by very limited players, and we are proud, we can proudly say that we are one of the players who produce quality products of 303 stainless steel. Similarly, 174 ph is another grade that is being produced by very few players. So our focus is on the specialty steel, and we would be, this would be giving us a huge edge because these particular grades that we are producing, and constantly we are trying to, we have a special 2 3 people kind of team who keep on researching and developing ways to produce these process these materials at our plant. So these products would be helping us cater the defense sector, railway sector, such sectors. So we are constantly trying to tap those market opportunities, and that would be giving us the two edge in terms of position. So I think within next 3 years we would be able to reach, we would be able to position our products in that particular market. Yeah.
Yeah. Next question is from Mr. Bimal Gandhi. Are your manufacturing facility designed and yeah, I think it's
Yeah,
a
I think
same
this
for them.
is repeated question.
Yeah. Next question is from Anandi Mittal. A quick question: what competitive advantage does your company have over peers, and how do you leverage them in maintain market leadership?
First and foremost, the delivery model, the conscious delivery model that I told we designed over these years, wherein, for example, the carbon steel products that our competitors delivered in 7 to 10 days kind of time period, we deliver it within 48 to 72 hours. So that is one biggest competitive advantage that we have. Secondly, we have carbon, stainless, and alloy steel under single roof with the widest variety, size range of the products and the widest shape range of the products. So, getting all this permutation combination within a single roof is the USP of Maiden in entire India. All three types of steel processed as bright bar and wire under single roof. So most OEMs, be it for auto sector or be it for home appliances, they use all three types of steel bright bars and wires, and we give them under single roof. So the purchase officer or purchase whosoever is the decision maker finds it easier, to get all the products they require in steel under a single roof. So we, by faster deliveries, we reduce their inventory cost, and for that we get a premium also, as well as for with all three types of steel being catered under single roof, we get a huge competitive advantage from our competitors due to these two main USPs. And that would the speciality steel that we are adding, like I said in earlier answer, so that would be helping us maintain the market.
Okay. So next question is from Mr. Gaurav Mehta. Your financial statement indicate that PAT has grown 4x since last year. What specifically has improved, and will this growth continue?
Yes. See, last 2 years were impacted by COVID. For example, in 2020-21 year, the first quarter had only sales of 3 crores due to lockdown, which should have been 50 crores. And we have approximately, expenses of almost fixed nature, such as interest, minimum labor wages and salaries, and minimum electricity bill, such costs and depreciation. So such costs are fixed approximately at 1 crore per month. So we didn't produce anything for first quarter, and we got these 3 crores of expenses. So it was a direct annual loss of profit. Like, profit was 5 crores, 3 crores you can subtract. So that is why in 2020-21 the profits were reduced, and in 21-22 year, the second wave of COVID came in for 3 months, and our sales for that quarter, which should have been 50 to 60 crore again, but that only turned out to be 12 to 13 crores in first quarter. So again, we were not able to cover these fixed expenses at all. So 3 to 3.5 crores of profit was converted into loss. So that is why, uh, this kind of 3 crores subtraction was done from the profit for last 2 years, and this is actually the real numbers this time in 9 months, which would be sustained over next years. God forbid nothing like lockdown comes up. So the numbers are very much, these are the real numbers that have come up this time, because last 2 years there was some or the other abnormality. Plus, like I said, collated nails we started exporting just 1 year back, and we are doing approximately 100 tons of quantity which we are getting made from outside on job work basis. That is the product that gives us approximately gross margin of 25 to 30%. So that also has impacted this profit. So that has increased our risk. Also, like I said, the specialty steel division that we are much more focused on from last 2 years. So in last 1 year, we have increased the overall percentage of, though it's still minuscule, but we have increased the percentage of sales of those specialty products, which gives us higher margin. So these three factors have impacted, and of course, since our strategic focus is for those products, so this growth is not just real but sustainable, and we can increase it. Yeah. Thank you.
Very nicely answered. Next question is from Ms. Bharti Agarwal. Sir, what is the post-listing structure of promoter holding and how does it impact your company's governance and management?
Yeah, post listing promoter holding would be about 73%, 73.36%. And the idea of the one of the bigger idea of listing is to get company corporate governance in line with proper listed companies. So to this extent, we have already inducted 3 independent directors, and we will continue to induct industry stalwart and advisors into the board and management team to really mimic a proper listed company.
Okay. We'll take the next question. Also, sir, what sets your company apart from your competition, and how does your unique value proposition benefit your customers? I think we have covered this.
Yeah,
Anything
just
like you
answer
like to
this.
add?
No, no, the delivery system and the delivery ecosystem that we have produced, and secondly, the variety of products that we cater under single roof, and the services we provide that gives us the less inventory maintenance of that our customer, the the cost that is reduced in the inventory management of the customer. For that, they pays us premium, so that gives us a value proposition.
Okay, okay. We'll take the next question. Oh, so last question from Ms. Bharti. What are your primary challenges facing the industry currently, and how is your company addressing these challenges through an innovative solution or strategic initiatives?
Like if you have heard my last few answers, always I have talked like what strategy we adopted in 2019-20. At that point of time, the auto sector was very you can say a kind of red flag sector at that point of time. So in business strategies, there is a general policy and strategy that we have. Like for currently we have that we have to first and foremost go into products which are our forward and horizontal integration, so as to increase the margins that we enjoy. The second focus specifically is to give something unique to the customers, the products which where we are either substituting the imports that are being done in India, or we are meeting out the demand for a specific product where the production in India is less, the number of players is less, and it has a huge export potential and a huge export demand. So we are focused on those two products post IPO. Like we are raising this entire fund for that purpose. So that is the primary strategy that we are focused on. You can say there is a strategy in business management, blue ocean strategy and red ocean strategy. So metal industry, if we talk in general, that is a red ocean with lots of competitors inside of it. And if we talk about the blue oceans, the pneumatic nails that we are producing now and the oil tempered wires that we are planning now. So those are the blue ocean areas, cleaner, less number of sharks in that. So we are focused strategically on that. And other than that, if you talk, Like I earlier said that our we have a team which has uh, a huge experience in operational expertise with dynamism of younger people. So it's a very good mix and match of well qualified people. So as and when these challenges are coming in, we are always ready to adapt to those, and to move ahead of it. And that has been the primary reason that why, despite of so much challenges such as COVID lockdown, like the COVID second wave that came in, like when the auto sector went down, being a major chunk of our sales, we still managed to grow 15x over last 10, 11 years despite so many challenges. That is the team that builds and the support of our customers, suppliers, bankers, and all the stakeholders that have been associated with us. So that's how we are, mm, answering to these challenges, you can say, and moving ahead and go. Yeah.
Very nicely explained. So that was last question from Ms. Bharti. Next question we will take from Mr. Jason again. Is there a specific asset or investment that you have sold that boosted your cash flow from investing activity by 8.21 crores?
No, there is no investment or asset has been sold. It is primary is purely funded from uh, the internal accrual of the company.
Okay, okay. So given next question is from Mr. Bimal. Given the current liabilities of rupees 67.24 crores, are there any plans to pay off this liability through the upcoming IPO? And if so, how we will impact the company's financial positioning and growth?
No, none of these liabilities are expected to be paid from IPO. Only the internal accrual would be used for reducing some of these current liabilities, and also potentially the integration of two facilities into one production facility into one would create a surplus of between 20 to 25 crore rupees, part of which could be used for reduction of liabilities.
Okay, okay. Another question for Mr. Prem. How do your company view competition in the metal sector, and how do you differentiate from other marketplace? I think this is
This
a
is already
repetition
yeah.
for third time. We'll go to the next. Uh, can you give segmental margins for your products like auto, hardware, furniture, engineering?
I think we don't have any segregation in terms of industry, but typically in terms of our product portfolio, like carbon steel, which is 8 to 10% gross margin business, alloy and uh, stainless steel, which is 15 to 20% margin business, and specialty steel, which is 25 to 30% margin business. Of course, some of the sector like hardware could be using more of a specialty steel, so hardware would be generating more margins. Engineering also would be generating more margins than other industries.
Okay. Next question from again from Mr. Gaurav Mehta. Uh, why was your equity doubled this year? Have you issued any right issue or bonus share to your investors?
Yes, so there was one-to-one bonus prior to IPO.
Yeah. So, what's your current order book?
For last 3 months, you can say approximately at a given point of time. Since we have orders like which we get on a monthly basis. There are orders which we get on a 10 days kind of gap periods, and few which we get on a daily basis. So at a given point of time, approx order book is of around 15 to 20 cr.
Okay, okay. So, it will be like morely like a monthly kind of order book. We
Roughly.
can say.
Yes.
Yeah. So next question is from Ms. Minakshi. In what ways your company advantage is in well positioned to take advantage of market opportunities in the metal industry? I think this is also we have covered multiple times. We'll go to the next question.
And even like even later on they can answer. You can ask people, just give a
Yeah,
contact or something, and I can answer if anyone is interested. Yeah, please
sure,
go.
sure. Uh, Please tell your revenue breakdown, revenue from top 10 clients.
Sir, we have more than 450 customers. If and most of our clientele is distributed. You can say because we don't believe in getting into a high risk zone by giving much more exposure to one of our clients. In terms of credit, so it's quite distributed in a good manner. So if I have to tell you, you can say in percentage terms, from top 10 clients, I get around 15% of my revenues. And
Okay, okay. Next question is from Bimal. Sir, any guidance on the company's financial performance for the upcoming quarter or financial year based on your current trend and company projection? I think we can't disclose this over here. Uh,
that one
we'll
on
skip.
one with Vikarji.
So we'll take the next question. Your company's approach to working capital management and how you optimize cash flow and liquidity.
Yes, so working capital is higher segment. We carry about 3 months of inventory, roughly, and about 1.5 month of receivable, which is also supported by certain payables. So on an average, you can say 4 month of revenues or cost of good is our working capital. We optimize our cash flows using mix of debt and internal cash flows. Maintain a reasonably good amount of liquidity, uh, especially with banker support and given our cost of capital and bankers' ability to manage any fluctuation in cash flows. We have never faced any issue as far as uh, liquidity is concerned and have always maintained timely payment to each of our uh, lenders, creditors, suppliers. Uh, there has been no single instance where even the payment has been delayed by even one day.
Okay, okay. Thank you. Uh, just a second. Next question is from Jesse A again. What with export rising to 3% contracted on Serbia as mentioned in your DRHP, where do you see the number going in FY24 and so on? And what strategic partnership are you doing with these partners?
No, no. Actually, dear, the supply goes to Serbia. That's true, but the company is German. So we are supplying to German customer, and remaining of the percentage of my exports is majorly to, I think, USA, and a slight portion to Israel. So we definitely are focusing on these two three countries because there is huge potential over there, US and Germany and Israel, where everyone wants to I think most of the Indian companies would love to work in those markets, and we are already having contacts over there, and we are supplying certain sales to those countries, and we see it going much more higher in
Okay,
terms of
okay.
strategy.
Next question again related to finance from Mr. Gaurav. Sir, can you explain your cash flow from operation negative in FY20 and suddenly positive over 9 month period amounting to rupees 5.1 5.10 crore?
Yeah. So cash flow from operation negative is after because in FY22 we took a conscious call to reduce our working capital. So that is why, because the payment was made to supplier, we reduced our suppliers significantly in FY22. The cash flow from operation is showing negative. If you exclude the working capital, it is always positive. Like EBITDA level, it is have been generating about 13 crore in EBITDA every year for past 3 years, as well as 17.62 crore this year.
Okay. Okay. So another question from Jesse. Can you give color on margin profile with exports and domestic sale? And what is your strategy on client mining?
Uh, Firstly, see, margin definitely is bit higher in exports as vis-a-vis domestic, because like we earlier said that it's the margin are distinguished on basis of what product we are selling, and obviously in exports we are selling much more of a specialty steel and higher collated nails and all the higher margin products. So that is why definitely export margins are much better, and that is why we plan to double down or triple down the export component in our total sales in the coming financial year. And as far as client mining is concerned, see, we are very much active online in terms of all the B2B portals. Those are there. I think we are part of them. Then we have a team of around 7 to 8 marketing senior people with 2 3 people who are constantly on client mining process, digitally and offline both ways. So we are also deriving databases from multiple places, on basis of which we go ahead with the marketing, and that is one primary reason that post COVID lockdown, we have increased our number of customers from 250 to 450. That is almost, you can say, double of the number. That is because of very aggressive client mining and acquisition as well.
Okay. So what step is the company is taking to mitigate economic uncertainty and ensuring long-term stability, particularly in the light of recent market fluctuation and global events?
Largely diversifying our customer base, our exporting the product, and shifting to specialty steel, which is a big market and very few suppliers in the market.
Okay. Okay. Next question is from Mr. Rajesh Shinoy. Hello, good evening. Would like to ask any reason that have added your company's recent increase in revenue and profits, and how do you intend to maintain it? So I think we have asked
Already covered.
already covered
Right.
this. Yeah. Vijay Raka wants to know from Vikasji any plans for how the issue is conducted, fresh issue or OFS? What is the
This
structure
is
of the issue?
entirely fresh issue for the growth capital. The structure is that it is book building issue, and the band price band is 60 rupees on the lower scale and 63 rupees on the upper scale. We are issuing 37.84 lakh shares, which equates to about 26.62% of the post issue capital.
Okay, okay.
And
Uh,
there is no offer for sale in this issue.
yes.
This is entirely a fish.
Also need to know any funding from investor or venture capitalist. If so, how were their asset
Till
used
now,
to?
till now, there has been no outside investments in the company. This is the first time that we are open to public, so to outside investors.
Sure. Next question for Mr. Vidit Gupta. Are you looking to enter into new geographies to enhance your revenues?
Definitely, definitely. It's the entire plan is focused on the expansion globally. So there are multiple strategic geographical locations that we are targeting, but I think that's a long discussion, so we should do it separately.
Sure. So this is, and now this is the last question. One last, can you tell us about overview of the current shareholding pattern and how it will impact the upcoming IPO? So
Uh,
Vikasji,
current,
yeah,
currently, the company is held by major two shareholders. That is a family-owned company. Me and my mother, who's chairman, and I am the MD. So we are designated those positions, and we have almost 60-40 kind of a ratio with other shareholders who purchased the share a while back, and those are also part of family and or older employees. So there are six other shareholders, very minority stake. And now post IPO, this entire block would drop down to approximately 73.75%, and the fresh issue is would create 26.5% dilution, and that would be the newest.
okay, okay. So that was the last question. So thank you, Nishant Vikas ji, Ramit ji, and Anand ji for answering this many questions to the of the investors. Nishant ji, over to you.
Yeah, so I would also like to, from my team and personally, I would like to thank everyone who joined. I guess there were 100 plus participants in this meet. So I'm really, pleased by the presence, and I thank you all for your time. And we had a very good event today also at Ahmedabad recently, wherein a great crowd gathered, and earlier we had it in Mumbai and Delhi. So, and this kind of event was also, I think, tomorrow, whosoever is joined would be, watching our IPO closely, investing money, and we commit that we would be definitely returning back more, and we would be growing, and we would be creating wealth for all the people who would be becoming part of this fund. So, with that note, I'll say thank you.
So thank you, Nishant ji. Thank you very much. Thank you very much to all the participants for joining the IPO meet of Maiden Forgings Limited. So now we will close the conference. Thank you.